decades of unemployment. What term life insurance can do all that? Western Reserve Alliance Advantage Term with living benefits. No other term insurance product bundles so many solutions to life's unexpected problems. And all in one policy. So for more information, call Brokers Alliance 1-800-290-7226. Stop selling the old term. Start selling the new.
Well, welcome back to the Business Insurance Zone, the talk show that focuses on insurance in your practice. I'm Steve Savant, your host, financial color commentator, and interviewer extraordinaire. And I'm with Marcy Pruitt. Marcy's the head of our disability here at Brokers Alliance. If you want to talk to her, go ahead and call her 1-800-290-7226, her extension 126, or write her direct, Marcy at brokersalliance.com. Well, Marcy, we're talking about DI today. We introduced it in the first segment. I'm thinking morbidity underwriting, which is disability, is going to be different than mortality underwriting, which is life insurance. Am I there?
Absolutely.
We'll talk a little about it. Do we have to pee in a bottle and draw blood?
You do, actually, Steve.
Okay. I just wanted to know.
Well, and a number of carriers have actually loosened up the underwriting. If you apply for, say, under $5,000 a month, and that varies carrier by carrier, $3,000 to $5,000, they will waive the medical requirements, the paramed blood and urinalysis. So they really are trying to simplify it for the lower indemnity amounts.
Now, are they still asking for attending physician statements then too, or no?
If you qualify for these simplified programs, the intent is to waive all of that. They waive the personal history phone calls.
Are they visiting the MIB?
Well, they'll do a MIB and or a script check. So those are the key questions. When's the last time you saw a doctor and what medications are you on? That's going to give you a lot of information about your client. You need to do the field underwriting so you're not blindsided when the application comes in. You know, we get their preferred healthy non-smoker ultra-rated life insurance and declined for disability.
Yeah, that's so hard because everybody goes, Steve, I just took the life exam. I'm super preferred. Right? And then they go, I just took my DA and I got deep sixed. What happened? I mean, the underwriting and the way they look at it is so entirely different.
Well, and a lot of conditions will not kill you today with medical technology. People are living a lot longer with medications and treatment. And
well, when you talk about typical medications, let's just talk about that for a second. So if I'm on hypertension or high blood pressure and it's managed, right? Is that a problem, or it depends how much you're taking, or is that a knockout?
That's typically okay, and it's not something where it's automatically, leads to stroke or something. So if it's controlled, the records show you're a good patient, you take your medicine, you check it, you routinely see your physician, then that's okay. It's insulin, it's diabetics, it's anxiety drugs, and a lot of the things, sleep apnea, some of the big ones we see, that restless leg syndrome. Every time you turn on the TV, there's a new drug out there for something. Those are the ones that so many people are on, and they are a concern.
Well, when I think of underwriting, and I don't go through simplified issue, I have to go through the normal exams, the collection of the APSs, and if I've had prior injuries, how much does that play into this? Well,
if it can be excluded. So I would say 70% or 65 to 70% of the policies are issued as applied for. 10 to 12% are declined, and the difference is rated rider. Actually, I correct that. 50-some% of the policies are issued as applied because the 20-some% or higher are rated, ridered, modified with exclusions. And they can address that condition. For example, you're going to a chiropractor, you're going to have a back exclusion. If it's not broke, don't fix it. So, and if you had other prior medical conditions, then they can simply exclude them.
If you wanted to do routine, kind of pre-qualify a client for DI, do you have paperwork that if we went through a kind of a battery of questions, do you have something like that?
Well, we do. Many carriers have a trial app, but with HIPAA now, we really need to still sign off and for a carrier to even review an attending physician statement. most people, you can call MIB, the Medical Information Bureau, and a very quick phone interview with personal information, they will mail you your report. And that's a great way for for an agent to go ahead and know exactly what's coded MIB.
And the client has to sign the HIPAA release for that.
Well, no, because it's a phone call.
So is the client calling, or
the
is the
client's going to need to call
Okay.
with social and date of birth?
Right.
And
so if I'm just trying to think, if I don't get it as applied for, then is there a lot of not takens then?
We try to work around that. That's, again, goes back to field underwriting. If the agent does a good job and prepare them for that, it's okay.
Do we have any kind of a form that'll help them prepare for that? Do you kind of have a...
Absolutely.
Okay, and so if they want to write you and ask for the form, they can do it?
Sure.
Okay, again, Marcy at brokersalliance.com is
Marcy
your email.
with a Y.
Marcy with a Y. Good thing you said that, because there's guys out there, most guys can't spell, so... And, of course, you can always call our 1-800-290-7226, extension 126. Well, when I'm thinking about prepping for underwriting, it sounds like I'm going to have to, if I'm going to not go through Simplified or Guaranteed or Group, I'm going to have to go fully underwritten. I'm going to have to watch what am I saying? If I went to the chiropractor just to have an adjustment, are they going to have a problem with just an adjustment? Or, no, you went there because your back was out.
Well, again, if you're seeking treatment, then that is a condition that you could go out and claim for immediately. So the carrier, to protect themselves, will go ahead and exclude that in most situations. And anytime, and the value of taking a rated or ridered policy is, take it. If your condition worsens, the policy can't be taken away. If your condition improves, the carrier can lift that modification. There's usually a review period.
Well, there's a lot of planning tactics, because I want to speak to not only individuals, but I might want to speak to execs, employers, key men, key women. It depends upon what scenario we're in. And our strategies and tactics to employ and deploy indemnification scenarios like disability are so huge that a lot of us are so, we don't even know how to pre-qualify a client. So that's why underwriting up front, if we can kind of get an idea what's up front. So you have a form, if anybody wants to call in, they can order it and you'll send it to them. And that'll kind of walk them through what's really what we're looking for.
Right, exactly.
I'm thinking, and of course, remember, I'm not an attorney, nor am I a CPA. And again, if you have any tax advice or anything like that, go ahead and talk to those fiduciaries, your CPA and tax attorney. And if you're with a broker-dealer, please feel free to run anything we say on this show through your compliance officer so you can use it. But I'm thinking about a tactical way of how much I've heard 2-3% is what you really need to set aside to pay for DI premium to protect 97% of your income. Is that a fair ratio?
Well, to protect 60%. So it takes about 2.5% of your gross earnings to protect 60%.
It could be higher if it's business or owner.
Right.
Okay, we'll talk about that in another show. But I just want to make sure. So it's only a couple points here to protect about 60% of your income.
And it really breaks down to less than a cup of coffee a day. I mean, percentage-wise to ensure your income. And that 60% mark is typically carriers place that. If you are healthy, working, and paying taxes, what do you bring home? They want to insure you for about that mark or a little less, so you have a motivation incentive to go back to work. And, on the medical underwriting, we may touch on this as well. That's really easy to uncover. The financial underwriting is the difficulty today, that carriers really want to be sure what you are claiming with the IRS and, what you are insuring.
So a 1040 is a necessary issue of underwriting. But pretty much if you're a W-2 employee, right, you can just show them your W-2, or do they want your 1040?
You can usually show a W-2 if you've been a W-2 for several years. Many carriers will accept that. Again, it depends what you're applying for. If you're a doctor that happens to be a W-2 and you want $15,000 a month, they're still going to want to see a tax return. But again, the silver bullet, how to dodge all this, is a guarantee issue. And when you work with a common employer and a program is offered either on a voluntary or an employer-provided basis, the financial and medical underwriting can be entirely waived. And that's a case-by-case situation. But that's the way to write individual disability if you have that market.
If our employer has the ability to do a group.
And they're still individual plans. They're not group as what we think of true group long-term disability, where the employer would be the master policy holder and each employee is a certificate holder. This would still be individually owned, permanent, portable plans, exactly like you would sell to one individual, but you're selling it to multiple individuals within an employer.
So underwriting, if I knew I was going to have maybe a problem, And I didn't really want to worry about the exclusion issues or so forth. An employer plan might be the way to go.
Right, yeah.
Okay. When I'm looking at it, we know we have several carriers. You know, have you seen one carrier a little more benevolent than the other when it comes to underwriting DI, strictly on the physiology side?
Absolutely. Some are, there's price, price, product, and service, and pick two, or there's sometimes a disconnect between sales and underwriting. So, each carrier has their sweet spots of health conditions, working out of the home, risk tolerance for
we carry
occupations.
we carry a lot of DI. Give me your number one you think is that they're just pretty much benevolent. I know that there's different areas, but is there one that stands out to you? Said, boy, they're pretty good about it.
There's a couple of carriers. Principal and standard both are very aggressive. Great definitions, good pricing, good in underwriting.
And those on a regular basis, is there anybody that you kind of go to when you have a specific, disease or vocation?
You really just want me to give you carrier names here?
Well, of course we do. This is the show. This is a wholesale internet show on insurance, and we are a tell-all show. Yeah.
It depends on the condition, absolutely.
Well, like you said, let's do a bad boy issue like type 2 diabetes, adult onset.
Well, when you get into impaired risk, then you're really going to be looking at your Fidelity, your Lloyds of London. They
Lloyds
are
of London?
impaired risk carriers, more so than your traditional white-collar marketplace. And then we have some that are very conservative, that squeaky clean white-collar, top classes, and otherwise then, step down.
When you see underwriting from an owner occupation, we're going to talk about that in another show, that whole own-oc issue, because there's a definition issue. We're talking about the physiology sides of these issues and the financial qualifications. But I'm always looking at own-oc as like, is that underwritten differently? Then, I'm just having my regular occupation. Now I might have a specific occupation. Do I have different medical and or financial requirements for that?
No. If that by OC class, if you are eligible to purchase that rider, then the limits are the same.
So in underwriting,
it's really by age and benefit amount.
So the older I am, I'm just assuming I have to pay more, like all insurances in regard to this?
Pay more, but also the underwriting requirements is somebody very young would not need even, like we mentioned, would not necessarily need the blood and the paramed exam. But over 50, for example, you
male
need
and
everything.
female cost the same or no?
No, females are much higher.
Female are much higher. Well, in life insurance, of course, females are always cheaper. But in medical and DI and long-term care,
they go to the doctor.
And not only do they go to the doctor, I just want to say before I go to break, they live longer. I want to thank Marcy for being on our show today. Disability quote, just call 1-800-290-7226. Her extension is 126. Her email is marcy@brokersalliance.com. Don't forget to hop out to our website, www.brokersalliance.com, for all your quotes on life, DI, LTC, annuities, and of course, group pension plans. I'm Steve Savant. You're listening to the Business Insurance Zone. That's the buzz on the biz for today. Get into the zone, the Business Insurance Zone.
This has been a Bravo video event of the National Insurance Clearinghouse and Brokers Alliance, one of the largest distributors of insurance products and services to a nationwide network of insurance professionals. You can contact Brokers Alliance at brokersalliance.com or 1-800-290-7226, extension 147.